Okay, hi everyone, and welcome to the Friday, July 29th installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone, and I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. Well, it's here. You know, we've been wondering about this for a couple of months now, but now officially two bad quarters, two negative quarters in the economy. We are officially in a recession. Even though we're hearing a lot of rationalization, well, it's not really a recession, but the definition has been pretty stable for the last 50 years. So let's just say it, we're in a recession.
Yeah, and obviously the Biden administration is bending over backwards trying to tell you why we're not in a recession. And, you know, I get both sides. We've got 6 months of slowdown in the economy. But boy, have things kickstarted because of a combination of tech earnings. Even the last couple of days have seen new stimulus that's going to come to companies, whether green tech or the chips. And I think, you know, for all those critics out there that said, gosh, what is Biden going to do? What is the presidential administration going to do for the economy? Maybe having the definition of a recession happen really kickstarted things, because all of a sudden deals are being made, negotiations, money is being thrown around, stock market is rallying. It's just an interesting time where we're seeing both a slowdown and all of a sudden, you know, some seeds of optimism at the same time.
Yeah, but can you spend all this money without just aggravating inflation at the same time?
I mean, historically, no.
No.
Right.
So throwing money at it now, maybe, you know, the rate point jump by the Fed. I mean, it's another 75 points this week, and there's word that they could go another full point through the rest of the year. Now that will take inflation out of an economy, but it'll throw us deeper into recession. I mean, I think we're in this between two stones right now, and either way we go, we're going to get hurt some way.
Well, right. I mean, we're clearly in a weird time. I mean, there's still a pandemic, but I think the pandemic economy is, for the most part, behind us. And so we've seen a lot of the values, especially here in Silicon Valley, of these tech stocks just get decimated because people are now doing things other than using software in their gadgets. And, you know, that contributes to a lot of concern around here for jobs. Now, the one thing that we usually see in recessionary times are pretty widespread job losses. And we haven't seen that yet, especially here in the Bay Area and in Silicon Valley, where the jobless rate is
freezing hiring. I've noticed
right.
that.
And that's often a precursor when a company says, hey, we're slowing hiring. But really to feel, you know, what was it? I think, I believe it was Harry Truman who said, you know, a recession is when your neighbor loses his or her job. A depression is when you lose your job. And our neighbors are still working, right? So
they're still going to work every morning, or working at home,
or right.
So I guess that's that's definitely a good sign. Housing prices. Now they've fallen, what, 20% across the country? I haven't seen the latest numbers for here.
I mean, the latest numbers that I saw were about a 7 to 10% drop. And that's some significant money. And I think a lot of that can be laid at the doormat, if you will, of rising mortgage rates, which, given another 75 basis points this week, it seems like mortgage rates are likely to rise even further. And that, I think, has scared a lot of people who are potentially going to buy a home to say, whoa, right now, that's a larger monthly payment than I want to make. And so we're seeing home values drop. And I think I wouldn't be surprised if we see them drop even further.
You know, I'd be more panicky, but over the last 60 years that I've been watching, every decade we go through an interval where housing prices drop about 10 to 15%. And then we come roaring back past that number and just keep going to, you know, increase of 20%. So I think this is actually another cycle at work too. So I'm not panicking about how home prices yet. As long as people are employed, they still got to buy homes around here.
Right. I think the job market is really the thing to watch. And you can argue about the definition of recession or inflation or whatever, but around here, it's, do you have your job? Do you have your benefits? Do you have your stock options? And that sort of determines, I think, the buying power. We saw in the recent earning reports, Apple sold something like $40 billion worth of iPhones in the last 3 months. So clearly, that kind of discretionary spending is still happening. That's the kind of thing, if you lose a job and you lose a paycheck, you think, well, maybe I won't spend $1,200 on a phone this year, but people are still buying a lot of the tech.
Well, and another piece of good news, I think, maybe not now, but we have built so many new homes and condos and apartments in the last couple of years. Usually we go into a recession and the building they started too late. And then we have to do catch up, which is what happened this last boom, which was we ran out of living space. This time I'm seeing huge complexes. I was just a couple nights ago, I was over at an opening of a park in the corner of Sunnyvale. There's a whole city going up over there, right at Lawrence near Central. I'm seeing that all over the valley, that there's been a lot of construction in the last couple of years. And so when we come back out, we're going to be able to absorb all those new jobs a lot easier than we usually do. So that's a good sign.
Yeah, I mean, we need more housing, period, end of sentence, and both for renters and for buyers. And it's encouraging that so far we're building through this. And that, I think, is something that we need to see, because the housing market really has become an albatross. I mean, it's interesting. We're known for it, but it also, I think, you look at the surveys of what millennials are doing and what, even people younger than that, and they're staying away from Silicon Valley and perhaps our tech industry because of housing concerns. And that's a very legitimate concern. And if we lose those young people, we lose the startups, you lose the whole sort of building blocks of Silicon Valley.
Yeah, we thought it was going to be traffic or pollution, but now it turns out, no, it's living space.
Yeah, well, that's bad too.
That's become our limiter now, which is, but we look like we're beginning to deal with it. So that's a good sign. Okay, earnings week. Oh boy, some companies killed it. Amazon killed it. Apple had a great quarter. These guys are holding the market up on some of these days, keeping it strong. But some of these other companies, Meta, ouch. Intel. I got a note from Bob. He said, the late great Intel, their stock dropped yesterday 10% on really bad earnings. Is the new chip bill going to be enough to, keep these guys afloat during these times?
It's a very good question, because Intel is just struggling so much. I'm trying to just look up the market value compared to even AMD, which, is also getting hit itself. But they're right about the same. I mean, I think AMD might be a shade higher, more valuable than Intel, and NVIDIA laps them all.
Oh, yeah.
This is really tough time for chip companies. And I think that chip bill comes at a really good time. As you say, the more money that the government, i.e. we taxpayers, spend on this, you could say that's going to be inflationary, but the chip industry has really been hit hard. It's interesting, the other companies you mentioned, Amazon and Apple, both in retail, both really doing well, online shopping, technology. But you look at some of the other companies that are involved in, regular foot traffic retail, and they're really struggling. So we're still seeing some of the vestiges of the pandemic, where people did a lot of shopping, and even most of their shopping from home.
Or we permanently changed our shopping habits.
Or that, yes.
I think we're going to find out Black Friday later this year, just how much people have shifted their lifestyle to online retailing. I don't know. I don't see people going back in numbers to stores yet.
Right. It's a social thing still, but you look at Walmart's numbers, Target, these companies are struggling, and they're desperate to get online. But then you run into the juggernaut that is Amazon. And, if you're Best Buy and you're trying to sell tech products online, you run into Apple. There's already beachheads set up by these big tech
whales sitting in your way. Yeah.
Yeah.
Now, you mentioned, you wrote me a note saying Shopify has been hit with layoffs.
Yeah. So that's not local per se, but another online shopping company. And yeah, and I wonder if that's also, what we're seeing in some of the streaming companies where, sort of as people leave their homes,
Yeah.
maybe they're not quite as invested in, whether it's their Netflix service or maybe their Shopify shopping service. But you look at some Apple and Amazon that are still making a lot of money. Shopify had a pretty big layoff. So it's not across the board success. Instead, it's a lot of concern in the tech industry if you're not one of the giant companies.
Well, now I hate to get personal, but Peacock, this is an astonishing number. Peacock added no new paid subscribers over the last quarter.
Yeah, I read that. I mean, obviously,
out of a potential audience of 330 million people, not a single person added a subscription to Peacock.
Right. So for those who don't know, you say it's personal. I work for NBC, which is owned by Comcast, which also owns Peacock. And, we've talked about this. If Peacock was its own public company, I mean, look at the valuation of Netflix, even Netflix, the big one, and Disney Plus is in there. The streaming world is taking a huge, I hate to say post-pandemic because there's still a lot of COVID out there, but you know what I mean? Still, it's a hit of people that are not just locked down and streaming, and also so much competition. I mean, Apple Plus, you got Hulu. It's a really, really rough time to jump in there. Obviously, I know nothing of the, what Peacock strategy is. That's a million pay grades above me. But you just look at any streaming company right now, and unless you really have a strong base of, say, the Marvel guys and the Star Wars guys, who I'm talking about here, it's a real struggle out there to get something through the noise and to get something through the fact that people are starting to go back to movie theaters.
Yeah, and I think you guys had some inflated numbers because of the Super Bowl and the Olympics.
Right.
So, well, we'll see. I mean, that number just jumped out at me. I'd never seen something like that before. Okay, we talked about the Fed. You think this is enough? I mean, these guys are bringing out the heavy artillery. When you start doing 75 points and you're talking about another 100 points waiting in the wings, they're going all the way. Do you think it'll be enough?
I don't know. It's too early to tell. One thing that the interest rate hike tries to do is slow spending, right? And in the next couple of, say, credit card cycles, when people see that the interest rate they're paying on their debt is higher, and they say, whoa, I've got to curb spending, right? Or, you're going to see mortgage rates likely go up again. And people would say, okay, maybe I'm not going to spend on that house or even that car loan, or, hey, my student loan costs more. But that takes a cycle or two, a month or two to kick in. And this is a long-term process. We said this is going to stay interesting in our economy for a while now.
We're already seeing food costs getting so high that people are actually changing their eating habits.
Right. And that's because everything has been inflationary. And this goal is to curb that inflation and bring prices down. And that's what everybody wants to see: lower food prices, lower gas prices, and the ability to buy a car again without paying $10,000 over dealer markup because there aren't cars on the lot. Same for used cars. Everything has gotten scarce and more expensive, largely because inflation has been so dominant in our economy. If we can curb that, that's obviously a good thing. But I think that takes at least a little bit of time, because people are still spending money. And that's the interesting thing through all this, is that we haven't seen widespread job cuts and the consumer has still been active.
Well, historically, the Fed, they make the move in the right direction a little bit late, but then they often miss the target. They overshoot the target. So we saw Washington just print money like crazy during the pandemic. Now, do you think they're locking down too hard? Are we going to swing back the other way?
Well, I don't know. I mean, again, one of the things that seems to be driving, say, the Biden administration right now is the fear of recession, and everyone calling it that, and competition. And so they managed to get, Joe Manchin on board for this, $360 billion green tech bill. That's going to bring a lot of action here to Silicon Valley. And the chip bill all of a sudden, which, we've had this chip shortage, and that hurts development of everything from your computer to your car to your refrigerator. And so that's spending. You could say it's targeted spending, and you could say, hey, that's good for the overall economy and good for Silicon Valley jobs, but that is more dollars being pumped into the economy. So this process of just putting a brake on by raising interest rates, I think it's going to take some time, because the government is still the government. It's still looking out for its constituents and where the jobs are and where the jobs might be lost.
Yeah, I mean, all true. But, as I looked at the chip bill as well as I could, it's hard to find a total number on that bill, and part of it is, and not to mix a metaphor, it's so larded with pork. I mean, these things start out lean and mean with a great idea and a perfect target. And by the time it gets through the two houses of Congress, it's bloated to 3 times its size, and you're buying, I don't know, treatment centers in Toledo and a new intersection, in Louisiana. And they seem to get filled up. I don't know what I've been searching everywhere. What is the total amount of the chip bill? I know 54 billion still goes to the semiconductor industry. But now there's $100 billion for scientific research.
Well, I think it's all part of a larger bill. So some of it was for the chips, and some of it is, I think they called it something like the, compete with China bill or something like that. So there's different sections of this, but I think what the chip industry was specifically looking at was, and I've seen different figures as well. I've seen 37 billion. I've seen a little more than that. Again, like so many government plans and bills, it's not clear or easy to understand. That's not a shocker, I don't think, but it is there, and it is something that, just look at Intel's numbers yesterday. It's really timely, and not just for a company like Intel that's struggling, but for everything we need that needs to get built with chips.
Yeah, no, absolutely. I also thought everyone's saying, okay, well, this solves the problem. Intel will get some money. They can build that new fab in Ohio. But you know how long it takes to build a fab? I mean, those things are, and then you gotta go through the entire shakeout cycle and approvals and everything else. We're not going to see that the new Intel domestic fab for what, 5 years, 7 years? It seems like we're fixing a problem that we should have been fixing a while back, and we're not going to see the positive effects, if there are any, for a long time.
Right. I don't know how much we'll have to depend on either foreign chip manufacturers or whatever we have going here. But yeah, these things take a while. This industry takes a while to grow. And that's bad news if you're looking for that EV, to be priced at what the dealer is pricing. And I don't know when that changes.
And it's not helping that Taiwan is in the news again. Things are heating up again over there, which makes us even more vulnerable. I mean, this is, if you really want to hit the United States at a vulnerable time, this is not a bad time for economic challenges, cyber warfare and everything else. I think we should be, looking over our shoulders, seeing what's coming. Okay. Instagram announced that it will shift more towards video content. They're saying that's been going on for a while. That's inevitable, and we're going to do it. But if you look at, Facebook, is Instagram now being positioned to become the new center of the Meta universe?
Well, I think the new center is what Zuckerberg wants the metaverse to be, the center of things. But I think it tells you a lot about that company, that, Facebook is still the juggernaut, but it's slow growth. Instagram is still hot with young people, but it's getting its lunch eaten by TikTok.
Yep.
And all these headwinds for Facebook, including, we talked about last week, Apple's crackdown on app tracking, for your privacy. Meta's earnings were pretty ugly. And I'm not sure how much of the credit or blame, whatever you say, goes to Apple, or how much just to a slowing economy. But all these ad-based companies, Snap got beaten up badly. Twitter's numbers were down. even as the number of people going on social media rises, the ad numbers are falling. And that's often, again, the first sign of a recession is companies cutting back on ads. But also, I think it's just TikTok is a monster right now in terms of where people are going to get their videos and their content and their sort of time suck. It's just TikTok right now. And the other companies are kind of in their shadow all of a sudden.
We can talk about YouTube too. They just announced they're coming out with a new app that'll enable you to take your long form videos and turn them into short form. And I read that. I thought, gee, I wonder what was the impetus for that.
Right.
Can you say TikTok?
I mean, Instagram had a really, really awkward week coming out and saying, well, we're going to do this. No, okay, we're not going to do that. And oh, the Kardashians are mad at us for this. And, it's all about trying to catch up to TikTok. And, remember when Facebook was taking over and MySpace had to change and, oh, we have too many fake accounts. And, when there's a dominant company in this area, people try to react. But imagine some of these companies, they're so big, and to try to turn on a dime and say, oh, we're all about short form videos now, it's just not a good look, and it's really difficult.
Like trying to watch a brontosaurus do a 180.
Right.
It's ugly and slow.
Good way of putting it, yes.
So what are the odds that Meta, they begin morphing all of their Instagram users over into video space and then send out a couple million VR goggles? Welcome to the metaverse. You're already there. Yeah,
but those goggles are kind of pricey. I think they just raised the price on them as well on the Oculus, and by $100. So that's not cheap. I really, and maybe I'm showing my age here, but I really wonder about the metaverse because, again, it's not new. It hasn't been successful when they tried it before. I've tested out Oculus. The video game part is wonderful. The travel part is decent. The, streaming video is okay, but you're standing there with the thing on your head. And the meetings, the audacity of saying, hey, we figured out a way to do virtual meetings after the last 2.5 years. I mean, come on. This is not new stuff here. And to build something and to invest billions and billions of capital in it just screams risk to me. And I'm not a Meta investor, but I think those investors are voting with their dollars, that they're very skeptical. They're not all bailing, but they're very skeptical about the future of this.
The metaverse is already becoming an object of humor. I mean, the internet is filled, like daily dose of internet. If you turn it on, they've got at least 2 videos of somebody with the goggles on, swinging away, breaking their TV set, falling through windows, falling downstairs. I mean, it looks perilous right now to enter, the metaverse. And I can just see a lot of people saying, I don't really want to be that stupid. I like my TV.
That's going to be a problem, is that right? I mean, TV, it's, what do they call this? The golden age of television, right? A lot of streaming, a lot of great shows, a lot of movies are also debuting on television. And that's really what people like, right? And, people are buying these big sets and they're sitting on their couch and they're enjoying it.
They're not full immersion. They're voluntary immersion.
Right. But, right.
Put on those goggles for it to work. It's got to be full immersion, which separates you from the actual physical world around you.
Right. But do people want to be separated when they're watching the new movie or streaming that show? I mean, people notoriously and famously do this as a couple, as a group. They second screen it with people while they're watching. You can't really do that when you have a thing on your head and you're sort of alone. So I don't know. I'm obviously, we'll see if it works and if people jump in. But what I've seen so far, makes me say I need to see more.
Yeah.
What's that?
As long as we're on Meta, the FTC is moving to block Meta's acquisition of a VR firm, which is kind of weird because Meta's bought 10 VR firms in the last, year? And now all of a sudden we've got the FTC coming in and saying, oh, you can't do this. We talked about Lena Khan, the woman who took over and that she was an activist and she was, you know, pretty heavy against big tech companies. And this looks like her first real move. And observers are saying, wow, this is kind of risky. I mean, it's not, doesn't have a lot of precedent, you know, for doing this kind of thing. And they think there could be a struggle, but, you know, brought over all this, and a lawsuit by, you know, Meta might be in their rights to bring a lawsuit against the FTC.
And I don't know what that would look like, but yeah, I think this is a more active organization going after the biggest company that's trying to dominate in this new space. And you know, I get it. I mean, just because Meta has billions to throw at VR, why should they be the only one buying up all these small companies? At the same time, they do have the right, and they do need to buy some of these to build what they want to do. But yeah, you know, maybe
stop
this
them after the third company. You don't stop them after the, you know, the ninth company.
I don't know. Semantics, really. I think this could be a test for the FTC, for the new FTC, but I'm not putting a whole lot of worry about what happens with this one deal. You know, either way it goes, Meta is still building this giant thing, and people are still going to, I think, be skeptical about the world of VR and having to strap something on your head to enjoy entertainment.
Yeah, but I think it is a glimpse of possible future of the antitrust activities of the FTC.
Yes, and a lot of people want to see more of that so that we don't get these gigantic companies that control everything.
That stifle startups.
Right.
Yeah. Okay, and finally, you know, this has been a problem for years that, you know, members of Congress are allowed to do basically insider trading. You know, we all know that you show up in DC as that freshman congressman, your net worth is $200,000, and you leave 20 years later and your net worth is, you know, $75 million. And you did all that on a congressman's salary. So it's interesting that public pressure has forced Nancy Pelosi, Speaker of the House, and her husband to sell their NVIDIA stock. And she took a $341 million bath doing that. They had made what, 3 million, and now they've had to sell out. Is this a precedent, you think?
I'm amazed that they're even able to own stock in these companies.
Yeah.
I mean, like, these are policymakers in their own
working on a chip bill.
Right. That affect companies in their own district, and they're allowed to own stock in these companies. That's bananas to me. I mean, I don't have a problem that reporters should not own stock of companies that they cover. But
absolutely. And we've had guys go to jail. Remember the Wall Street Journal guy who was doing the on the street column about stocks was actually doing some insider trading, and he went to prison.
I mean, because he was insider trading.
Yeah.
And I, you know, don't want to put too fine a point on this, but if you're making policy about companies and owning their stock, is that not insider trading?
It isn't. It isn't if you change the semantics. And congressional trading is never officially insider. That's how you protect yourself.
All I know is it's a terrible look for someone who's out there trying to advocate for, you know, some decent things and some clear, and, you know, hey, let's get clearance on this. Let's get transparency. By the way, I own stock in a company whose fate I determine. That's terrible, terrible looks right there. I'm amazed it was ever able to happen. Good for the, you know, journalists and advocates that are trying to call this stuff out. I just don't get it. It's I don't see any.
If they had bought Intel stock, I go, okay, they're just suckers like the rest of us. But NVIDIA at that moment is that's just shameful. There's no way you can deny that you didn't have insider knowledge.
Well, and it's been going on for years. And I wonder, you know, are these legislators also buying, say, cryptocurrency and coming up with legal decisions and policies on that? I mean,
well, they might have this week because Bitcoin went through the roof this week. So maybe we ought to see what the purchases were, you know, inside the Capitol.
Right. But look, it's just such a terrible look. I mean, Pelosi, and she had every right to do this, was out there in front saying, hey, President Trump, we need to see your taxes. There needs to be financial transparency. And meanwhile, you know, that just doesn't make any sense. It's a terrible look. And I don't know why they're able to do it in the first place.
Well, that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage. By the way, we didn't have anything amusing to talk about this week to end with, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and YouTube. Have a great weekend, and we will see you next week. Bye-bye.